Hey everybody, so we got Eric and Carley here. She was cool enough to come back on and chat with us a little bit more, just kind of about what she's seeing in the markets and just, how everything's going on her end. So first off, welcome back. Great to have you again.
Thank you. It's good to be here.
Yeah, and so you and I had a chance to start catching up just a little bit on what you're looking at in the markets and whatnot. And you were kind of
Right.
talking a little bit about corn, so I figured we might as well jump straight in.
Why not?
Quick recap for everybody. Carly is definitely primary like a futures in the future space, so that's what she
Correct.
specializes in. She obviously has experience across the breadth, but figure we'd start there. Kind of just seeing you're saying that you're seeing some kind of interesting moves in corn. What's going on?
Absolutely. So we've had kind of the perfect storm in the grain market. So the commodity that's being most affected is corn, but it also is bleeding into soybeans and even wheat, although the wheat fundamentals aren't nearly as bullish as the other two. When grains start to move, they all kind of go along for the ride. So we're seeing some really interesting things. But really, there's a couple catalysts. The three main things are we're getting we've gotten the unthawing of the US China trade deal, which held kind of a lid on grains for a couple of years as that was all working itself out. So
Interesting.
that was one issue. And then as that's kind of, like I said, thought out over the last several months, we started getting into weather issues. So hot and dry weather here for the planting season, hot and dry weather in Brazil for the growing season. So there's all kinds of weather related issues going on. And as well, in addition, we've got obviously a weaker dollar and the Fed's money printing. So you put all those things together and everything spins out of control pretty quickly. Uh,
And
yeah, I was just gonna say, so the crazy thing is we're seeing price action in corn and hogs, some of the commodities that we see in Bitcoin, which is literally like just straight up, no rhyme or reason. Everybody wants to be long. It doesn't matter what price. And so it's a little bit scary.
yeah, that was actually one thing I was gonna, talk to you a little bit about. What are some of the factors, that you're seeing? So you mentioned weather, which for, a lot of commodities, weather is a thing. And,
Mhm.
that always gives it some sort of like unpredictable element. You
Right.
know, I imagine you probably have an idea on how the market may react in different weather conditions, although you never really know what the weather is going to be.
Sure.
Are you finding that here, or is the market
Well,
just
I mean, there's so many, like I said, everyone's kind of lost their minds for lack of a better word. And we're seeing this in a lot of asset classes. It's not just corn. So there's another thing that I should mention also is there's kind of a seller's strike. So
hmm,
what's happening is a lot of the farmers are worried about this year's crop. They're worried that they're not going to be able to um, yield as much corn as they normally do. And so what's happening is normally during this time of year, as farmers are planting, they're guessing how much corn they're going to have in the fall to
right?
sell, and then they start contracting with grain operators or trading in the futures to hedge their prices and things like that. But they're a little nervous to lock in prices on X number of bushels when they don't
Interesting.
know how many bushels they're going to get. So it's almost, if you remember last year, there was a buyer strike in crude oil, and crude
Hmm.
oil in the front month dipped down to under 10 and actually even traded under negative a few times
Negative, yeah.
because nobody wanted to take delivery because the fundamentals were just so out of whack. This is literally the exact opposite of that. Nobody wants to be in contract to make delivery because they're not sure they can actually deliver. And if you're a farmer and you, let's say that you agree to deliver 5,000 bushels of corn in the fall, but you only come up with two, you're going to be in deep water. And so farmers don't want to put
Right.
themselves in that situation. So they're all buyers and no sellers. And that makes for pretty wild trade.
That's interesting. So in that kind of scenario, not to dive too far into, the farmer side
Sure.
strategy for something like that, but out of pure curiosity, do they underhedge? Do they like guess on the low side and then maybe have excess supply, or, what do they do there?
Um, So that's the tricky thing. I will say in general, like on a normal year, and this is obviously not a normal year, but in a normal year, I would say a lot of farmers under hedge. They should be
Okay.
hedging and they rarely do. We call them cash market speculators. They always, people are humans are emotional. And
Hmm.
especially when it comes to your work and your job and your business. And so you always think corn's going to $5 or $6 a bushel. And usually it doesn't. Usually we're trading
Right.
3 or 4. But so they're always very optimistic and they rarely hedge. I don't want to say rarely hedge. Some farmers are very good at hedging and it's mechanical and it is what it is. Others
Right.
probably, most, I would say the majority probably underhedge because they're speculating a little bit. They don't want to be left behind. If on a year like this year, if you would have hedged your crop at 350 to $4, which on a normal year would have been perfectly uh, smart, would have been the right
Right.
thing to
Yeah.
do. They're leaving a lot of money on the table. So some farmers don't want to be in that position, so they generally underhedge. With that said, in this scenario, I'd say they are dramatically underhedging because they just truly are questioning how much corn's actually going to come out of the ground. Plantings are actually going, from what I've seen, on pace and seem to be relatively normal, but they're worried that I'm hearing all, and honestly, to be fair, this time of year it's always like that. It's always everybody's worried about it's either too dry or too wet. So there's always those type of stories, but when you're dealing with runaway stocks and commodities, everything gets blown up and maybe even blown out of proportion. Although there's definitely
Hmm.
some strong fundamentals in the driving the grains. I'm not saying that corn should be at $4, but I'd say $7, which is where we are, is probably a little bit crazy. The market's definitely overpricing the negative aspects of things. But if you look at a long-term chart of corn, and I know most people probably have never done this, most people assume that commodities just go up over time, kind of like stocks because of inflation and other things.
Right.
And that actually is the exact opposite. If you look at corn,
Yep.
we've seen basically occasionally, once every 3 to 5 years, corn will have a massive rally and it never holds. It jumps
Yep.
up for a few months and then sells off. I want to say 2008 corn rallied to 750, which is roughly where we are now. July contracts at $7. The May actually did touch almost 750, if I recall. I think somewhere around 740. But anyway, in 2008 we saw prices get to these levels, and
Yep.
by the end of the year we were trading under three. So
Yep.
what we see now doesn't necessarily mean this is what's going to be the case in December or January. It's so you want to be careful assuming that commodities always go up because they rarely hold their gains.
Yeah, and it's actually fast. So I was pulling up just on the TD Ameritrade platform, corn,
Hmm.
they use /ZC for their
Sure.
corn futures. And I'm looking at the pretty much back to 2003, and it's exactly like you said. So
Yeah.
2008, they had a pretty big rally up to like 70, it looks like 765.
Yeah.
They got up
That
pretty
sounds about
high,
right.
and then exactly like you said, later that year
Yeah.
they just plummeted down. That's
Right.
that's fascinating price action. I didn't expect to
It
see
is.
when I pulled this up. This isn't what I was expecting to see. Like, because I exactly like you said,
Yeah.
most people probably hadn't zoomed out this far. I
Right.
haven't. Um,
Well, and that's, obviously there's signs of inflation that we're seeing all over the place, lumber, corn, copper. But again, I caution people, people assume that it's here to stay. Maybe it is this time, maybe this time's different, but it usually isn't, because the thing about commodities is most commodities are renewable. Most of them are renewable annually. So the cure for high prices is high prices. As soon as prices spike up, farmers plant more. Oil producers go online. I mean, there's all
right.
types of things that change the supply and demand fundamentals. But the hard part is in commodities, it's kind of feast or famine. It's literally
Yeah.
one way or the other. Rarely just trading. I mean, in the long run, we're trading sideways, but in the short run, it doesn't do that often. It's generally ramping up or ramping down. So it's pretty volatile.
Yeah, the amount of chop's pretty interesting. So I'm looking at a
Hmm.
midline, just for the data, like I said, going back to '03, and it looks like 471 is kind of like that midpoint. And
Right.
I'm taking a look at early 2020 around April, and it was down around 308.
Hmm.
And since then, it's now where it's at
Yeah.
now.
Yeah. It's
So,
pretty wild.
so when you see stuff like this, what do you do? Do you obviously you have existing positions, but do you start
Sure.
adding, other positions, or like what's your thought
Well,
here?
I mean, that's what makes commodity trading extremely tough. Is if you're a little early, the market rips your head off. If you're a little late, it does the same. So it's a really kind of can be a tough game at times. And the thing is, people that are, you can. I'm sure there's some people out there that have made a ton of money just being
Sure.
long lumber or being long corn. But the reality is, those types of trades, like they're making trend trading. Trend
Yep.
trading this year has just knocked it out of the park. But on most years, that sort of thing doesn't work. Usually they're buying the highs, selling the lows as they're, you know what I mean? So it's just interesting that markets go in cycles. This particular cycle is extremely favorable to trend traders. Anybody trying to swing trade, or like we do a lot of option spreads and counter trend trading. And you know what? That honestly just has not worked in the last couple of months because things have not only jumped fundamentals, but the charts don't matter. And so it's just one of those things. I mean, I've seen this before. This isn't new. I've seen it in 2008,
Sure.
2011, and 12. So it happens. But when markets normalize, the strategies that are working very well now probably aren't going to work, and vice versa. So it's going to be interesting to see how this pans out.
Yeah, yeah, and it's one of those things, especially if you're trading, actively products like this, it's difficult to know when to
Sure.
adjust or when to kind of wait things out. And
Yeah.
that very much happened to me during the COVID recovery. I'm
Hmm.
used to, bear markets lasting almost 300 days, 290 plus days.
Right. Yeah, that was
And
odd.
and
Yeah.
I kept kind of just getting ready for the next leg down. And
Sure.
I just kept not getting it.
Well,
So
you know what the problem is? You know too much. You're too familiar with things.
yeah,
Like literally, that was a kind of a handicap this year because things are just acting so oddly. I mean, um, a guy like Warren Buffett, that he's patient. He waits for the good values. I mean, that just ran away without him, and it's not his fault. We've never seen anything like that before. It is what
right.
it is. So
Yeah, yeah,
yeah, it's
that's
been a crazy
interesting.
year. Yeah.
The other thing that you mentioned, and this is one of the, I don't know, I always think one of the fun thing about talking to people who are in the futures world is you all know so much about everything because everything affects what you guys do. So you were talking about just the dollar, right?
Right.
And that's affecting a ton of stuff right now. But I'm curious
It is.
specifically to your world, what impact is, just the current state of the dollar having?
Right. So people tend to just kind of put the currency markets on a back burner and ignore them, but it's actually the worst thing you could do because um, even though, like, if you pull up, let's say you pull up a news story on crude oil or corn or soybeans, you're always going to find a story about the supply demand fundamentals or some sort of issue that's going on that's causing prices to move. But if you take a step back and you overlay a US dollar chart, like a dollar index chart on
Hmm.
most commodities, you'll see that there's really a huge negative correlation. It's not perfect, but and it's not immediate either. It takes a little time,
Right.
but generally, as when the dollar's cheap, it kind of opens the door for rampant speculation in commodities and even stocks. When the dollar is expensive, you still might get some rallies in commodities, but they're going to be really tepid. They're not going to be quite as speculative as like what we're seeing today.
Right.
I happen to think that the dollar is putting in a bottom. I've thought this for a few months, and it's just chopping around, but we're making higher lows. And I mean, it's volatile. It's not definitely not a clean turnaround, but I still think in the end, the path of least resistance is going to be higher for the dollar. And if that happens, it may not be overnight, but eventually what that's going to do is really kind of pop the commodity bubble and
Mm.
probably even hold the stock market back a little bit.
Yeah, that's one thing that a lot of us are kind of watching like a hawk just every time that the Fed is talking about their monetary policy, just because their hands are so far involved on things now that
Right.
the decisions they make have a big impact. So
They do.
when we're seeing the Fed talk about their overall fiscal policy and kind of quantitative easing, especially
Mhm.
maintaining rates where they're at for the foreseeable future, does that factor into kind of how you're, I guess, analyzing the
Mhm.
potential movements for the dollar?
Sure.
Or yeah.
The interesting thing about the futures markets and commodities is they price things in advance. So
Mhm.
I believe that the low interest rate story and all of those sorts of things are already really kind of baked in. I don't know. I know Yellen made a comment today that really moved things around temporarily,
Mhm.
suggesting that maybe interest rates should be hiked. But I don't think the Fed's ready to do that, and I don't think the market thinks that that's going to happen. To be honest, I kind of an unpopular opinion. I think interest rates have probably peaked out and will head the other way. I know that's most people are looking for 2 to 3% in the 10 year
Yeah.
by the end of the year. I actually wouldn't be shocked to see us trade 1% or lower. I know nobody else is thinking that, but there's just a lot of weird things going on. For example, the interest rate differential in the U.S. is massively favorable. So anybody that's looking for fixed income would be much better off sending money from overseas to the US to put in treasuries. I know 1.6% isn't like a gravy train, but it's probably the best you're going to get. And if stocks stop going up every single day forever, then people are going to start looking at those sorts of things. And I think that'll prop treasuries up and put some pressure on, uh, downward pressure on yields.
That's a fascinating kind of a
Yeah.
thought there, because I was having a conversation last week or the week before, and one of the things we were talking about is just really the lack of low risk yields in
Right.
pretty much anything in the US that delivers a
Yeah.
positive real rate of return. Because, like you're saying, you get that 1.7%, inflation's
Yeah.
about 2, so you're
Right.
still
Yeah.
walking out without money. So,
Exactly.
it's
Yeah.
just fascinating to hear that thought, that they could go even lower
Yeah.
still, which is just
Sure.
hard. It's hard to.
It is. I mean, as a saver and as parents that are retired, I'd prefer that it not go lower, but I just feel like
Right.
it's gravity will kind of do that. Um, time will tell. I mean, one other thing also to keep in mind is if I'm right about the dollar, which nobody has a crystal ball, but if the dollar
Sure.
does firm up and start moving higher, that actually will also lure money into treasuries and push rates lower. So it's going to be interesting to see how things pan out. I mean, um, the big game plan probably should be for the Fed to start raising rates. I mean, it's really kind of silly that just so much money and so much just stimulus and low rates. I think they're probably overdoing it, is my opinion. Um, and I just feel like maybe they've kind of backed themselves into a corner, and I'm not sure how they're going to get out of it. So
Those
it's, yeah,
literally were the exact words I was going to say. I think a
yeah,
lot of us feel like they have backed themselves into a
right,
corner where they started down this path. And I mean, it's just like you said, right? As soon as
yeah,
Janet spoke, you saw the market start kind of reacting heavily to
right,
that.
yeah,
So, yeah, it seems like the market is just really resistant to them deviating from the plan. But how long?
yeah,
How
right.
long can
I
you
mean,
keep it up?
and yeah, and everything is just artificially being pegged to certain, not pegged, that's not the right word, but influenced. And so at some point, I mean, the unwind is, we're going to have to pay for the unwind, and I'm not sure what that looks like. Hopefully I'm retired by then and don't have to worry about it, but uh, we'll see.
And well, that's kind of interesting too. Just considering that, again, kind of taking it to the future space. When you guys are looking at different products, are you considering that potential unwind now, or is that something that
um,
you're kind of just keeping an eye on and will adjust as needed?
yeah, no, that's just something in the back of our, we keep those types of things in the back of our head, and we try to, it's really hard when you're looking at this stuff day to day to forget about what's going on now. And it's always a good idea to take a step back, look at the monthly chart, see what where we are over the last 10, 20 years. Because if you're looking at daily charts, it's really easy to get caught up in
Mm,
what's going on, and you don't really understand or see the big picture. For example, like if you look at um, the Nasdaq, took a little bit of a tumble today.
mhm.
In the overall scheme of things, a very, very small tumble. If you look at
Right.
a daily chart, it seems like a big shellacking, but if you look at a monthly chart, you can see it's literally like nothingness. So when I hear people really eager to buy the dip into this sort of market, I really have to question, um, you know, have they seen a dip? It's hard to
Right.
believe. It's almost like everyone's forgotten about March 2020. It was just a year and a couple months ago, but and so far buying the dip, shallow dips has worked. I mean, if it keeps working, keep doing it. But someday I feel like things have got to probably move the other way pretty sharply just to shake things up.
Yeah, and it's an interesting thought, and it's one of those. It's just the plague of a trader is in a lot of ways it seems like things can, perpetually march up, and
Yeah.
a lot of people cashing in on that. But exactly like you said before, anybody that's been around
Yeah.
long enough, we know that when that drop does
Right.
come, it's brutal, and it can
Right.
absolutely erase a lot of accounts altogether. So
Yeah.
yeah, I think the overall approach that you're mentioning of just kind of being skeptical and
Sure.
trading the plan makes a lot of sense. Um,
Right.
to that note, I'm curious, what kind of trades are you guys liking so far this year, being that things have been what they are?
Um, So it's honest, to be honest, it's been not the greatest year for
Sure.
some of the stuff we're doing. We tend to be swing traders. That just has not been the right approach this particular cycle. Hopefully that changes, but we'll see. But we've been doing a lot of luckily most of the stuff we're doing counter trend is limited risk. So vertical spreads and options, things like that we can't get hurt too badly on, although it gets frustrating after a while, that's for sure.
Yeah.
But this is as far as like the grains and the meats and some of the other commodities, the volatility is massive. So it's probably a good time to be a premium seller. But with that said, it takes a really big account to survive. Like if you're trading a smaller account, it's forget I said that. If you're
Right.
trading a sizable account and you can ride out the big swings, you don't have to worry about margin pressures, then this is probably a good time to start putting on some positions, maybe even just something as simple as strangles with hedges on both sides so that you can't get completely run over. But it's really amazing how much premium is built into the options. I mean, we're looking at soybean options, $3, $4, $5 out of the money, or bringing in some good money. So you have to be
Yeah.
careful with it, and it's not for everybody for sure. But there's some opportunities there, I feel like.
I was actually going to ask about that. So when I was looking at
Mm.
corn, I'm looking at the IV percentile, and it's 99%, meaning
Yeah,
that um, only what is that? 3 days were below the current
right.
low.
Yeah,
So
it's
I
just off the charts, which is unfortunate for people that had options out there already, short options. But like I said, if you've got a big enough account, you can just ride through it, hopefully, and hedge yourself and just ride the wave. But it's definitely testing some patience, that's for sure.
Yeah, yeah. So do you find kind of your approach of looking at both the futures market and also trading in kind of the more traditional equity slash options market, is does that help in situations like this where you're seeing the moves that you are in the future side of the house?
I'm not sure it's that helpful. I think
Okay.
for me personally, so just to clarify, like for disclosure purposes, I'm a futures and options broker. So we provide our clients with trading ideas and research and guidance and those sorts of things for futures. And then obviously, as far as speculation goes, I keep my future speculation pretty small, my personal speculation, just simply because I honestly, we're so busy and it messes with my mind if I'm trying, and it's conflict of interest, to be honest.
Sure.
So if I'm dealing with my account and clients' accounts are going bad, that's no good. So I do trades. Anything that recommend to my clients, I put my own account, but I'm not like swinging 100 lots or anything like that. I'm just keeping
Sure.
it small. So with that said, then I have obviously my personal investment portfolio, retirement accounts, savings accounts, those sorts of things. Which, to be honest, I think uh, my being on the future side of things, I tend to be more short-sighted
Okay.
because just simply because we're always looking at what's going to happen in the next couple weeks to couple months, not a couple years. And so I
Right.
really actually think it kind of hurts me in my investment account because
Interesting.
I tend to be a little um, like if I think the market's expensive, I probably lighten up a little too much, a little too early. So it probably actually hurts me, but it is what it is. At least I can sleep at night. I don't get too stressed out.
Yeah, that's actually a
Yeah,
kind of a fascinating thought because,
right.
yeah, it's makes sense, especially as you say it, because I actually totally get that, especially as it goes through. Like I said, I do trade futures less than you all do, but when
Mhm.
I'm going through a specific trading cycle, I do find, that there's kind of tunnel vision on whatever I
Right.
think is affecting that cycle, and that cycle
Right.
only is compared to the macro. So that's
Correct. Right.
interesting.
Yeah.
Do you find that when the futures are having moves like they are now, do you find that there's kind of a favor to moving into strategies that you may not deploy as frequently? Um,
Yeah. So at this particular time, we're probably with some of our bigger accounts, we're suggesting a lot more option selling than we normally would. In more quiet markets, we would just stick to maybe vertical spreads, butterflies, things like that with limited risk. But there's with all the premium out there, I mean, it can be a wild ride, but the odds are pretty favorable when you have the opportunity to sell really deep out of the money calls, especially in some of the commodities for a large amount of premium. And of course, anything could happen, but the
sure.
odds of the market getting up there are not super great. So if you have the wherewithal, both financially and mentally, to ride it out, they're pretty good trades, or they can be.
Yeah, yeah. Because
Yeah.
The reason why I asked that is because I also find myself doing a lot of similar digging into different strategies just on
Mhm.
the option side of things, mostly because the moves that we're seeing in a lot of the products that I like to trade, the index ETFs and
Right.
really a lot of S&P 500, 100 stocks, those kinds of things, they're all near all-time highs and they're all just kind of hanging there. And that
Right.
is a very annoying place for them to be for my style of
Sure.
trading because you're just kind of
Yeah,
watching them.
I hear
Um,
you.
so I find myself doing a lot of really like you mentioned before, strangles and things like that, trying
Mhm.
to offer a little bit different style of exposure. So I know
Right.
myself, I've been having to adapt quite a bit to where things have been. And it seems
Mhm.
like you might be in a similar spot on the future side of things.
Oh, absolutely, definitely. I mean, we're looking at abnormal markets. Maybe this is the new normal. I don't think so, but we won't know until 6 months, 8 months down the road.
Right.
One thing that I have noticed that seems to be potentially a good idea in some of the commodities here, especially like gold and silver. Ever since the middle of last year or so, gold and silver had massive runs up. And since
Hmm.
then, the implied volatility in the call options has been really, really rich. And so one strategy that some of our clients have used, and again, it can be a rough ride. Metals are always a rough ride, but it tends to um, give plenty of room for error, is covered calls. So basically going along a futures contract, maybe, uh, for example, like September silver and then selling an August call against it. So something with 50 to 80 days to expiration.
Hmm.
You can bring in most of the time you can bring in a good $1.50 to $1.80 on that, which means you can be wrong on your futures entry by $1.50 to $1.80 and really kind of break even at expiration. So it gives you, if you're not familiar with silver options, if you collect a dollar, that's 5 grand. So if
Right.
you're collecting a dollar and a half, that's 7,500 bucks. That's a pretty good premium. And all you really have to do is just not be wrong. If the
Right.
market falls out of bed, you're going to take some heat. But if it trades sideways or goes higher, you keep the premium and you're good to go. So again, it takes a decent size account to do that. I'm not saying someone with a $5,000 account should even consider that. But if you've got, um, I'm not going to throw a number out there, but let's just say at least 50 grand, 50,000 to do something like that,
Yeah.
preferably more like 100,000. You can do those pretty comfortably. And like I said, give yourself some room for error.
Yeah, yeah, and it's kind of fascinating when you get somebody that trades futures the way that you do, really implementing some sort of multiple legs, or some, but like you just said, right, a covered call, something that's
Sure.
really simple on the option side of things. But I know a lot of futures traders that, especially as they're starting out, they don't really think like that. They start
Yeah.
with buying a future, selling a future, you know what I mean, those kinds of
Right.
things. And I always try to explain to people that, when you're trading things like that covered call, a lot of times it can be just maybe slightly more complex. But when you start looking
Right.
at a risk to reward profile, it starts to make a lot of
Correct.
sense, even though it might
Sure.
seem, kind of intimidating like
Right.
that. Yeah.
Absolutely. And it does take a lot of it for, I mean, for me personally, I like that idea of that type of strategy because it takes a lot of the emotion out of it. Because your timing doesn't have to be exactly perfect. If
Right.
you're within, like I said on that previous covered call idea, like if you're within a buck or so, then you're probably going to survive and be fine. Whereas
Yep.
if you're just buying futures outright and you get in and the silver drops a dollar, you're down 5 grand. That's tough for for most retail traders to stomach, and they're probably going to end up either getting stopped out or panic and get out at the low. Um, so it really kind of balances out the mental aspect if you're hedging with options.
Yeah, yeah, and again, depending on the way that you set those up, there's a lot of
Yeah,
ways that you can kind of set up covered calls.
right.
I know for me, a big thing that I like to do on the derivative side is I'll, do it at a ratio or something to
Sure.
not cap the upside, or things like that.
Yeah,
So
absolutely.
it's go ahead.
You could be creative. Yeah,
Right.
actually, this is going to be kind of a shameless plug, but I wrote a book that was released last year, and it's called Trading Commodity Options with Creativity, and it talks about just those things. That there's no rules in option trading. You
Yep.
can literally make any risk reward profile. You can do anything you want, but people have a hard time thinking outside of the box. So one thing that we try to encourage people to do is scaling. So for example, if you
Right.
did let's say you did the covered call in silver just hypothetically, and the market spikes up, you could maybe consider selling another call because if you look at the deltas, um, the delta on your short call, your original short call is probably going to be quite a, I'm not going to say quite a bit less, but probably less than your futures, which means as the market goes up, even though your short call is getting in the way, you're probably still coming out a little ahead. So you might feel
Right.
comfortable selling a little extra premium into volatility and that sort of thing. So there's, you could trade around it. There's all kinds of things you can do. You're not, people have a tendency to just think they put the trade on and then never look at it again and that's it. But you can, there's no rules. Like I said, you can do anything you want to do.
It's funny you say that because normally I really do consider myself probably like the least creative person on just in human existence. I'm like very, very pragmatic. Everything is a system. So I never consider myself creative in really any capacity. But when it comes to trading, like that is one of the beauties I see is you can turn it into whatever you want it to turn. So I
Absolutely.
that's actually a really fun idea, and I'm glad that actually you shared that book because that might be
Sure.
helpful for some folks that struggle with that concept. It's one of those ones that luckily I have a lot of clarity. It's really the only place I have any sort of creative clarity in my life, but it is exactly as you say, especially once you start learning how to manage the Greeks and how the positions
Sure.
are going to react over time, like you said, adding that
Right.
additional call you
Hmm.
may still have upside potential depending on
Right.
what you're long, stuff like
Yeah,
that. So
absolutely.
yeah, that's super cool.
Right.
Uh, oh, go
One
ahead.
thing I should mention that your viewers might be interested in. So these types of strategies, like we just mentioned, take a pretty big account to
Right.
employ. But you can do that the same type of strategy using the CME released
The
options.
micros. Yeah.
Yeah, they have micro futures and micro options now. It used to just be futures. Now they have both futures and options on the micro size.
Cool.
So literally for a 2000 in a $2,000 account, you can practice some of these strategies. You're probably not going to ruin your life. If you're really wrong, you might lose hundreds of dollars, not thousands. You know what I mean? So
Right.
it's a really, really good way to get familiar with option trading and deltas and all those kinds of things.
That's actually a
Yeah.
conversation I wanted to explore a little bit with you. What's the liquidity like in the options on futures there?
Okay, so if you're talking about just the micro on
Yeah.
the S&P
Yep.
micro, they're liquid. You don't, there's
Okay.
really no issue whatsoever getting in and out. The market makers are great. Um, Even in the overnight session, I mean, the bid-ask spreads may be a little wider than it might normally be or be on the E-mini, but trust me, it's not worth not trading. Like they're
Right.
absolutely liquid around the clock.
Who's playing in that space? I get the appeal
Um,
to the retail traders. It's accessible, but in
sure.
terms of like, creating all that order flow, I'm just curious
Right.
who's in there.
Um, well, I think it started with mostly market makers, but
Oh,
I
okay.
think the retail traders have really caught on with it. I think that like
Interesting.
we encourage all of our clients to use that for kind of like paper trading. I mean, or
Sure.
they could,
Yep.
depending on account size, maybe that's just the biggest they want to go, and that's perfectly fine. There's nothing wrong with that. But
Right.
for somebody that's testing a new strategy or just wants to, they're not sure about options, they want to learn how and see how they move. It's absolutely great. Like you can,
Yeah.
I mean, an at the money option with 30 days is off the top of my head is probably only like $500 at the most.
Right.
Maybe even a little less than that, maybe 700. So even if you're trading like the most aggressive you possibly could with the micros, it's not gonna, uh, you know, probably not gonna blow out your account. So it's a really, really
Yeah.
nice tool. Yeah.
Yeah, that's really cool to hear about the liquidity. When I
Yeah.
first saw them, the first thing honestly that came into my mind was like, oh, it's only going to be retail traders in there. I didn't expect the depth to be there,
Yeah.
but what you're
No, it's
sharing is
great.
really, really neat that it is
This,
there.
yeah, the CME did a really, really great job with that. And the thing is, they've been consistently adding expirations. So it started out
Got
with
it.
just the quarterlies and the monthlies, and then they've been adding weeklies. And honestly, they're having no issues getting liquidity in there. So it's pretty awesome.
Yeah, that's super cool because I
Yeah.
know that we talked a little bit about the micros when we talked last time, and it's something that every time I have a conversation with somebody about futures, that's where I always try to direct them. It's like I said,
Right.
when I
Yeah.
first started, they weren't there, and it
Hmm.
was kind of terrifying to be honest. Like
Right.
to put on a first futures trade because you realize
Sure.
that 10-point move in something like that can just be
Right.
catastrophic.
Yeah.
Um, so yeah, that's really neat.
Mhm.
Another question I had for you is for the product offering on the
Mhm.
micros.
Okay.
Are you guys kind of focusing on like the indices and like the main commodities, or do they have kind of like the full suite of products available in the micros?
Okay. So That's actually a very interesting question. So our brokerage offers basically anything that the exchange lists, we offer. Not all brokerages do that. There's
That's
some of the
cool.
bigger houses will only give you access to like the main contracts. Some of them
Right.
don't offer micros. So you want to be careful before you open an account, whether, whoever you open with, just make sure that they have what you're looking for, because not everybody carries all products. Again, we do, but there are only micro options in the S&P. So there's
Okay.
my S&P. Well, actually, I take it back. I apologize. Stock indices, I should say, because there are options on the Nasdaq,
Right.
micro Nasdaq, micro Russell, Dow, and S&P. So all of those have micro options. If you're going to trade micro options, those stick with the S&P. Everything else is a little bit questionable when it comes to liquidity. So you're going to have
Got
your
it.
best experience in the micro S&P.
Got it.
There's a micro gold futures contract, which does not have options, but the micro gold futures is an awesome product. It's only 10 ounces of gold.
Right.
So that way you're not going to get your head ripped off if you're a little early or wrong.
Yeah.
To give you an idea, like the full size gold contract is 100 ounces. So if you buy gold and gold goes up $10, you made or lost $1,000. But on a micro, you're only going to make or lose $100. So you can be a little more comfortable position trading as opposed to playing with tight stops and things like that. You can just put a micro
Right.
on and hold it. So that's a great product. There are microcurrencies. There are no micro options on the currencies, but there are microcurrencies. So if you're a currency trader, that's a really interesting market to, again, kind of get your feet wet. Most of the microcurrencies, you make or lose $1 a tick. So they're
Oh,
pretty manageable.
yeah, that's
Yeah.
awesome.
Sorry.
It's
My
okay.
dog's barking. Yeah.
So, actually, another question just on the really on the man, I just totally slipped. Oh, I
It's
was curious
Frankie's
about
fault.
the euro yen. Like when you're talking about the micro futures
Mhm.
on products like those, is it again like a fairly exhaustive list, or are there only a handful that
Uh,
have good liquidity?
Mostly just the majors. So
Okay.
the yen, the franc, the euro, British pound. There's Canadian and Aussie, but once you start getting kind of beyond those, it gets questionable.
Okay, got it. Because for whatever reason, I remember when I was in college, I went through this really psychotic stage in my life where I wanted to trade a lot of forex, and I was trading
Okay.
all different kinds of forex, and it was just an okay experience. I remember I was putting in
Yeah.
tons of time to just
Right.
try to stay afloat.
Yeah.
So I when I think about starting, trading some sort of currencies in the micros, to me that's also
Mhm.
fascinating to kind of integrate with a standing account, just so that you can kind of
Correct.
see how things move.
Right.
Um, you know,
The nice thing about the microcurrencies also is they're traded on the futures exchange, which is means all the transactions are guaranteed, everything's centralized,
oh,
everybody's looking at the
cool.
same prices. So, like if you're trading forex, most people don't realize this, but you're not trading in some giant
Yep.
currency market. You're literally trading in a market your broker created for you, and
Yep.
you're trading against the house most of the time. So it's definitely I don't recommend people trade forex. I mean, to each their own. But I'm not gonna
Yeah, that's
badmouth
it.
anyone that does it, but
Sure.
there's definitely some money safeguards that are missing there. Like, for example, if the brokerage goes out of business, there's literally nothing, no regulation or rule that says you're going to have any chance of getting money back. You might,
Right.
but you're probably not going to. So,
Yeah, I mean the thing that I like to tell people when they talk to me about forex, obviously it's a little easier for me because I'm just Eric from his house. So
yeah,
I don't have any
right.
regulatory restrictions, and I just tell everybody every single year I get a statement from my
Mhm.
broker that says the number of people that were profitable in forex in their forex accounts, on the
Oh,
retail
that's
side.
interesting. I forgot
Yeah,
that they did that.
yeah, and it's not a lot of people. I think last year it
Yeah.
was less than 38% that were profitable, and which
Honestly, I'm surprised it's that high, to be quite
I,
honest.
so when I actually reached out to them, because I was curious, normally it was in the teens, and I was
Yeah.
curious. I was like, what, how? And
Right.
essentially, they were saying that they had like a couple really big runs of education within the broker for,
Uh-huh.
teaching people about currencies and forex in general. And they said that they held a couple seminars where people were actually actively trading,
Hmm.
and then they pretty much didn't trade again. So a handful of
Right.
them made a little bit of money and
Hmm.
they didn't trade again.
Right.
So it skewed the
Peaked
stats
up
for that year.
yeah,
Yeah,
I
which I
gotcha.
just I thought that was
That's
kind of,
interesting.
yeah, it was fascinating. So I was like, how did it like doubled, literally doubled?
Wow,
Normally it
huh.
was like 12 or 16%.
Yeah, that sounds more like it.
Yeah, Forex is brutal. I remember
Yeah,
it always felt like I had to read everything to understand like the
sure.
potential impacts, and it was
Yeah.
exhausting. Yeah.
Well, at Forex, just like futures, futures is the same way. Most people lose
Yeah.
trading futures, and the really the reason is leverage, and it's not necessarily the markets themselves, but most people don't understand how dangerous leverage can be. When it works, it's absolutely great.
It's the greatest.
When-
Yep.
yeah, but when it doesn't work, it comes back and it bites hard, and people unfortunately too often learn that the hard way. And so,
Yeah, yeah,
yeah,
that's actually another interesting conversation. I'm curious when you're talking with clients about futures and introducing them to the space. How do you express pretty much that notion to them? Because a lot of people that I know of, they'll either be super focused on the risk or super focused on the
right.
potential return and kind of not be able to take that whole thing into context.
Sure. So we put out a ton of educational material, books,
It's
videos on our
awesome.
website, all that kind of stuff, because we really want people to know what they're getting into. Anytime someone uses the word investment, I straighten them out right away and let them know, like, there's really no such thing as investing in commodities because number one, they don't just go straight up all the time. They're usually back and forth. I mean, we've seen
Hmm.
crude go from 30 to 150 back down to 30. So it's not as simple as just buying and holding like you do in stocks, and there's no
Right.
dividends in commodities. So it's just a whole different animal. And plus, you have to deal with leverage. So
Yep.
we make sure everybody understands what's going on, what they're getting into, what their risks are. We encourage, obviously, risk capital only. They
Yep.
shouldn't be trading with their mortgage payment, that sort of thing. So we're really, really big on that. And I mean, obviously, we hope that people make money. And we're not trying to
Sure.
scare anybody. We're a brokerage. We only make money if they trade. But at the same time, we don't want to mislead anybody and make them think that they're going to get rich and retire and quit their
Yeah.
job, all that kind of
Yeah.
stuff. Which unfortunately, there's a lot of material out there that kind of leads people to think that
Yeah.
that's more common than it is. And obviously, it's very uncommon for anybody to be able to trade for a living. I've actually found that the worst thing that could ever happen to a new trader is to make money. I've
On the
seen
Yep.
people, yeah, I mean, they'll open with, let's say, for example, one guy opened with 20 grand, and literally in 3 or 4 days, he had it at like 65, 70 grand, somewhere in there.
And he
And
had it figured out. He was good.
yeah, actually, the funny thing is, he still literally didn't really know what he was doing. He called me up. He's like, wow, I didn't realize it was this easy. He's like, does everyone do this? And I'm like, no, nobody does that. And so
Yeah.
but I kind of feel bad telling him that because once he realized he should
Right.
be like, scared, then he started losing money and it just never improved from there. But
Yeah.
that's the worst thing that can happen is somebody winning right away because then they think that they're smarter than
Dunning-Kruger
everyone
effect.
or yeah,
Yep. It's
something
I
of
was
that kind.
actually building a video on that I'm going to put out probably next
Yeah.
week because
Okay.
I think just about every trader that I know, myself included, I incurred my biggest loss when I was going
Mm,
through that period of time where I
sure.
was still learning options. I was doing well, and I had a bunch of winning trades, so I decided to start scaling.
Hmm.
Except, I was what,
Right.
20, and nothing could come fast enough, so I needed
Yeah.
to scale 10x right now, and it hurt. Like I remember,
Yeah.
yeah, when I was in college, I definitely incurred the biggest loss. So
Shoot.
it's fascinating that you kind of discuss that worst case scenario for
Yeah.
some traders winning on that first trade, because it can kind of set you up for a
Yeah.
career of problems. So
Yeah.
I think that that's a really valid point.
Right. Which I kind of worry about the current environment because I mean, people that are, people making money just simply buying Bitcoin and
Yep.
holding it for a couple years or making massive amount of money. And I feel like they probably are underestimating the risks and just how difficult that sort of thing truly is. I mean, markets that go straight up have kind of made it easy for some of them, but yeah, it's not always going to
Oh,
be like that.
I saw the same thing during COVID. I was losing my
Yeah.
mind because, like I said, I've been doing this
Yeah.
for, a while now, and I was gearing up for this bear market that should last
Sure.
300 days. It should last 300 days. And
Yeah,
then all of a sudden, couple weeks in, and it starts rebounding, and I'm like,
I know.
what's going on here? I was like, oh,
Well,
it's just a double
and
bottom. It's going to come back down.
yeah, and it
And it-
almost always double bottoms, and it didn't. It
and I
literally
was
just
just
turned, and that was
dead
it.
wrong.
Yeah. Well, I mean, because you were going off experience. That was your that was your
And it
problem.
killed me.
Yeah.
I just remember
Sheesh.
I started trading I like maintain my general approach. So a lot of what I do is selling premium.
Hmm.
And if we're near highs, I tend to be lightly invested and I
Hmm.
kind of wait for pullbacks to scale in. So,
Right.
I saw this global pandemic big drop. I was getting ready to like scale in for the long term.
Yeah.
And I like had just started scaling in and I see a
Yeah.
rebound and it obviously it was good,
Yeah.
right? Because it still
Sure.
helped the account, but I was like just getting ready for the dance
I
and
know.
it was all done. And I was like, man.
Yeah.
So
I did the same thing. I
halfway
mean,
through it, I started buying leaps just because I was like, you know
yeah,
what, man, this worked for
you got
everybody
to have
else.
something out there. Yeah.
Yeah.
I hear you. I kind of with my investment portfolios, which generally you shouldn't trade, but I was lucky enough to go really, really light right before
Mhm.
everything hit. And so I had plenty of buying power and I started buying a little too early. But then once it turned out I hadn't bought what I wanted. Like
Right.
I had
Yeah.
so much more to employ, but it just
Yep.
ran.
Yeah, and
So,
it's exactly like you said. Sometimes that's the interesting thing about trading is just,
yeah.
experience is really helpful in the long term, but sometimes
Sometimes it hurts you. Yeah.
in short-term anomalies like that,
Correct.
it really,
Well, I
really,
keep when that like when that, actually, I mean, last year was a great year for anyone that had got managed to get something on, even if it
yeah,
wasn't as much as they wanted. So that's good. But I keep revisiting the idea of at least I wasn't one of those people that like cashed out on the lows and panicked. And because I mean,
yeah,
it's sadly I talk to people all the time that do that, and it's that you can ruin your retirement by doing
yes,
just one little mistake like that. That's really sad.
yeah, yeah.
Yeah.
So being mindful of your
Mhm.
time, there's one other conversation I wanted to make sure that we had a chance
Okay.
to touch on, and it's one I'm integrating in almost all of these that I'm doing now because it's so freaking prevalent, and that is cryptocurrency.
Right.
So, again, I this isn't to turn the whole conversation about crypto. I'm
Mhm.
sure that you have some familiarity with it, but I'm not
Yeah.
looking to get into nitnoy detail. But what I am curious about is just how things like Bitcoin futures are starting to factor into your world. Because I
Okay.
find that for just about anybody who's investing or trading, really trading,
Mhm.
I think they should pay attention to crypto because it's a thing and it's
Mhm.
here. And,
Yeah,
they haven't shut it down. So it has legs of some sort. We don't know what.
sure.
So I'm curious just how you guys are kind of approaching that.
Sure. So, to be honest, I was a little surprised that the futures exchanges were so quick to
Yes.
start listing Bitcoin, to kind of legitimize it. I'm not saying it's illegitimate. I'm not going to
Sure.
badmouth anyone that's trading it. I do point out that if you remember pets.com blew up because it was a .com. And
Oh, right.
look, it went bankrupt, and now we have Chewy, which is basically the same business, just a different name. So all I'm saying is, even if cryptocurrencies becomes this big global game changer, that doesn't mean it's going to be Bitcoin or Ether. You know what I mean? So I'm not an expert, but I just have really big reservations as to
Got it.
whether these valuations can hold. That said, I've been wrong for 20,000 in Bitcoin. So what do I know? Okay,
Yeah.
so the futures exchanges listed a Bitcoin contract, but they made a mistake. And honestly, it really wasn't their fault, because at the
Oh,
time when
interesting.
they listed it, Bitcoin was like 15,000 to 20,000. Actually, the day that it was listed is when, I want to say 2017, like December 2017, maybe 18, no, 2017. Bitcoin peaked out at 20,000 and then dropped to 3,000. Literally, the timing of the top was exactly when the futures contract started trading. Um, so the idea was, before the futures contract existed, there really was not a convenient way for most Bitcoin holders to sell. You could buy, but selling wasn't. There wasn't a lot of liquidity. Some brokerages didn't allow you to sell. So there's these things going on. But the problem is the CME listed the contract as representing 5 Bitcoin. So as time went on and Bitcoin became more and more expensive, that contract became really, really big.
Right.
And because of the volatility, the margin is huge. If you want to trade one full size Bitcoin futures contract, it represents roughly $250,000 worth of Bitcoin, which honestly, in the world of futures, that's not a humongous contract. That's
Right.
about the same as the E-mini S&P, but because the volatility is so high, the
Right.
margin is outrageous. So the margin to hold that is about 100. I could be off a little because I haven't checked it in a while, but I think it's like $140,000 or just something silly. So that prices most retail traders out of the future side of things.
So I'm
However,
looking, sorry, just
yeah,
to,
no, uh-huh,
so I'm looking at it right now.
okay,
And I have portfolio margin on this account, and the margin requirement is
okay, so it's even
$181,088.
higher. Well,
So
that might be upcharged a little bit, to be honest, which I don't blame them for doing. Um, but in any case, it's really, really high.
yeah,
So the average retail trader, that's just not going to work for them. They want to buy like, you know, 0.02 Bitcoin somewhere else.
sure.
So anyway, so the contract was just too big. So everybody talked about Bitcoin all the time, but nobody was trading in the futures because the contract was too big. But just
Right.
conveniently, just yesterday, the CME launched a micro Bitcoin future, which is fabulous. So it's 1/10 the size of one Bitcoin. So it basically represents, let me double check it here, represents roughly with Bitcoin here around 54,000. So it's basically like $5,000 worth of Bitcoin is what it is. And the
Got it.
margin is only about 2,300. So suddenly retail traders can now trade Bitcoin futures. Some people might be asking, why would you trade Bitcoin futures when you can just trade Bitcoin itself? Well, the reality is Bitcoin is really not a highly regulated market. So I know that's the appeal, but it's not going to be very appealing if you buy Bitcoin, you make money, and you can't get your money out. So
Right.
there's some counterparty risk there and some other things that go on in the cash market that you're not going to be exposed to in the futures. In futures, the CME guarantees all transactions. So if you buy Bitcoin, it goes up and you made money, you will be able to get your money out of the account.
And
Um, yeah.
that's a good point, because I actually had a conversation with one of my buddies, Zev. He's actually like really into the cryptocurrency space. He's working at a
Mhm.
startup that's kind of working on the commercial rollout of cryptocurrencies to like banks and things like
Mhm.
that.
Oh,
And
cool.
yeah, one of the things he was talking about is, even if you buy, Bitcoin in Coinbase, or,
Yeah.
whatever broker that you want to use, in a lot of instances, like, you still don't own that Bitcoin. And if
Yeah.
something happens with that broker for whatever reason, you can find yourself kind of in a bad spot. So I think
Yeah.
that that's definitely one piece. And I think the other thing, there's still leverage afforded to you, when you
Mhm.
trade the Bitcoin futures. Because I had to pull it up. I didn't realize that that was already a thing.
Mhm.
And yeah, there's the micro Bitcoin futures, and their point one Bitcoin. That's so awesome. I love
Yeah.
that.
Yeah, I'm excited about it. Like I said, it's we just listed it on our platforms today. The CME listed it yesterday, but our clearing firms like to test it and make sure everything's running smoothly before they throw it out there so that there's no catastrophes. But we're up and running. So honestly, the liquidity came pretty quickly. It's not the mini S&P by any means as far as liquidity goes, but
Sure.
I think it'll pick up pretty quickly. We've already had quite a few phone calls and emails about people inquiring about it and looking to trade. So.
I was actually going to kind of ask about that. So when you're looking at just Bitcoin in general, the futures,
Mhm.
it's a kind of an anomaly of a product, I would say. So
It is.
what's your feeling towards it? Like, if you were going to approach it, what kind of strategy would you be looking at?
So here's the thing. I probably wouldn't touch Bitcoin either way. If well, I take it back. With the micro, I actually might consider shorting it, even though because you can't. I'm probably not going to lose my house going short Bitcoin
Sure.
with the micro. But with the full size contract, they actually did list options against it, but the options were so crazily priced, like they're so expensive and the margin's so high, it just doesn't work. So I
Got
prefer
it.
option hedges and things like that. So I'm not sure. There's really not much of a strategy available other than be in or out, short or long. So there's
Got it.
nothing fancy you could do with it. But the nice thing about the micros is you can scale in, scale out of positions. You don't have to be all in or all out.
Yeah, I mean, I'm taking a look at them
Yeah.
right now, and they are shockingly liquid looking.
Yeah.
They're definitely after hours a little
Right.
bit
Well, and
wider,
keep in
but
mind, they've
uh,
only literally been trading like 48 hours.
right,
So
exactly.
yeah.
Yeah, that's really cool. I love to see that. That's very neat. Okay, so cryptocurrency question, and then I'll let you off the hook.
Okay.
When you're thinking about things like Bitcoin and or really any sort of cryptocurrency, Bitcoin has become the household name, but
Mm.
um, what are some of the things that you're looking for before it becomes more interesting to you as a product to really onboard as something that you regularly trade?
Um, if there were liquid options, reasonable option liquidity, then I would probably consider trading it, to be honest. I mean,
Okay.
just as a not as an investment vehicle, but as a trading vehicle. Although, let's face it, it's worked better as an investing vehicle than anything anything else on
Yeah.
the planet. So I mean, who knows? But also one thing to keep in mind: the futures, the Bitcoin futures, are cash settled. It's not
Yep.
like most futures contracts you hold. I mean, nobody does, but if you really wanted to, you could hold it to the end and take delivery of the commodity.
Right.
In Bitcoin, it's cash settled. So there's a little bit of um, it's not perfect. Let's put it that way. As far as pricing, there might be a little inefficiencies there, but if I mean, there's no perfect market for anything, to be honest. Even especially Bitcoin, if you're looking at Bitcoin on the cash side of things, you're probably facing wide bid ask spreads and those sort of things. So, I mean, you just have to decide what is going to work better for you. But like I said before, the just the fact that transactions are guaranteed and there's regulations and rules, I think, are make Bitcoin futures really attractive. That sort of
That,
thing.
and I mean, the other thing that Bitcoin really hasn't figured out, I don't want to say that, that's a little dramatic, but that they haven't really navigated well enough, in my opinion, is just
Mm.
the transaction fees. They can be kind of brutal.
I've heard that. Yeah.
Yeah. So I
Hmm.
I started trading Bitcoin really like when it started becoming popular, at least in
Hmm.
my world, like maybe 2012 ish,
Oh wow.
and it just really curious about it. So
Hmm.
when I kind of first started tinkering with it, then um, not a lot of information on the product and whatnot. And as it, has progressed, I always thought that the transaction costs would come down at least
Hmm.
more, and they really haven't. They're still pretty
Hmm.
high. So I think that's
Wow.
another really big,
Yeah.
feather in Bitcoin futures cap, is that you can
Sure.
really avoid a lot of those fees, especially if it's a
Right.
larger transaction size.
Hmm.
Yeah,
Out of curiosity, because I've never transacted Bitcoin in the cash market. So
yeah.
is it like a bid ask spread, or do they actually tag like a percentage fee on top of it?
So it's the second. So
Okay, I
they
got it.
just
Okay.
tag some sort of transaction fee, and one of the interesting things about it
Hmm.
is when you purchase your Bitcoin, it requires a certain number of confirmations of the transaction
Hmm.
before the money is available to you. Now, once you have
Okay.
an account with a broker and stuff like that, kind of like
Hmm.
if you add money to, like if I had money to TD Ameritrade, even
Right.
before the money's there, they credit the account with the money,
Sure.
knowing that the money's coming. So
Yeah.
brokers will start to do that. But one of the cool things with Bitcoin is based on how quick you want your order prioritized for those
Hmm.
confirmations, you can choose to pay more, and it
Okay.
kind of moves your order up on the priority
Wow.
list for those confirmations, but it's
Well,
expensive.
that's interesting.
Yeah.
Honestly, hmm, I would that's interesting because I'm wondering how regulators are going to look at that when they if they do get in, because we
Yep.
would be like we would be out of business if we tried to do that sort of thing.
And
Huh.
it's fascinating to me. That's one of the
Wow, that's
I
interesting.
yeah, because I have no idea how a lot of that stuff is gonna like turn
Yeah,
into, a function. I mean, you saw
right.
as soon as I saw, I mean, Elon Musk, he kind of just does what he does, but as soon as he
Yeah.
started talking about Tesla and that they're gonna be like, no shit, like holding Bitcoin. At first I
Yeah.
thought a lot of places they'll say that they'll accept Bitcoin, but typically what that means is
Yeah.
they'll accept a payment, convert it to
Hmm.
cash. They're
Yeah.
talking about like
To hold it.
holding,
Yeah.
yeah.
I,
And as soon as I saw that, I
yeah.
was like, okay, like to me, it's starting to gain a
Yeah.
little bit more traction than I was
Right.
like previously giving it credit
Sure.
for.
Yeah.
Um, but
That's
it's,
impressive.
but it,
He has a little more guts than most business
yeah.
people though.
Oh,
Like
shit. I mean, yeah, most of that stuff. I
yeah, he's
just, yeah, I love
yeah.
watching what he does because it seems like he's kind of following what he thinks is, right, and
Yeah.
trying to, just move things forward essentially.
Yeah.
Um,
Yeah.
And I'm really curious how that's going to work even on the business side with them holding Bitcoin, because I know
Right.
that they're trying to figure out how are they going to treat it as an asset class and things like that.
Sure.
So,
Yeah. Well, good for him. Someone's got to blaze the trail.
yep. And if somebody's going to do it, I think Elon
Yeah,
might be
he's
that
the one.
guy.
Yeah, I
Yeah.
agree.
Um, so it's been an absolute pleasure catching up with you again a little
Yeah,
bit, and I honestly can't thank you enough for schooling me up on some of the new happenings in the futures market. I gotta
sure.
make sure I get in touch with you again to get the latest and greatest in a few months, maybe, just because
Absolutely.
I didn't know about the micro Bitcoin futures. So
Oh,
that's,
really?
yeah,
Oh,
no, I haven't
all
caught that
right.
yet. So that's
Cool.
super freaking cool.
Yeah.
So thank you for sharing that with
Yeah, you're
me.
welcome. Thanks for having me.
As always, yeah, super, super awesome chatting with you. And I look forward to catching you again.
Thank you.
Take care.